Banks no regulation. Fintechs no payments. Crypto companies no crypto. Very few teams understand all three. We do. And we are all in with Nostro. That's exactly why we believe we can solve what others couldn't. Crypto is already a $3.5 trillion market with more than 550 million users. Yet only 0.0045% of the world's 360 million businesses accept it. No business can afford to ignore a market this large. If businesses could sell for crypto, they already would. 15 years after Bitcoin, business adoption is still near zero. That's a 3.5 trillion of stock liquidity. That's the market anomaly. Crypto failed as money. The industry spent 15 years solving volatility. Then stablecoins arrived. Crypto infrastructure exploded. Business adoption never followed because stability is necessary, but it's not sufficient. Crypto must preserve the advantages of crypto while performing the functions of money. That's where the industry stopped, and that's exactly where Nostro begins. In Nostro, crypto works like any other currency, and fiat gains the speed and flexibility of crypto. That's how businesses finally get the infrastructure needed to use crypto in the real economy. For the first time, they don't have to choose between fiat and crypto. They can simply do business and sell into a 3.5 trillion market. The turning point is when crypto finally works as money. Once businesses can tap into 3.5 trillion of crypto buying power, they won't ignore it. That's what creates a long-term demand. Now let's see how Nostro makes money. Nostro combines banking and blockchain into one regulated financial infrastructure. Like any bank, we earn by serving individuals and businesses. Unlike any bank, we earn every time crypto liquidity moves through our infrastructure into real commerce. As crypto commerce grows, transaction volume compounds, so does our revenue. Now let's see what it takes to build it. We are raising through a safe on Wefunder, with native crypto asset incentives unlocked once the business reaches profitability. This is a rolling close round. We don't need all the capital on day one, but we are looking for strategic investors who are committed to funding the full round as we execute. Now let's see why early ownership matters. Infrastructure creates the biggest upside before it becomes obvious. That's why early ownership matters. Our public model is built entirely on disclosed conservative assumptions based on capturing just 0.5% of global crypto liquidity. If you believe that's realistic, the upside speaks for itself. The NDA model uses the same operating logic with additional confidential revenue streams. The difference is not optimism, it's information. Now, let's look at your exit opportunities. Let's be honest, this is the slide every investor is waiting for. We designed multiple exit strategies from day one. Some create liquidity early, others maximize long term value. The biggest upside belongs to those who stay with us through maturity when the market finally catches up with what you see today. If this opportunity is so obvious, where is the competition? The answer is simple. Everyone is protecting the business they already have. Neobanks make money from payments, FX, and interchange. Crypto giants thrive on trading, volume, and speculation. That's already a great business. Legacy banks are still testing the waters, earning fees by moving money to and from regulated crypto exchanges. Nobody is focused on bringing crypto into the real economy. That's why today nobody passes our 5-point test. Now let's see how risky Nostro really is. Only one risk really remains: execution. Every investment should be judged not only by its upside but also by its downside. This round creates a regulated financial infrastructure, not just operating burn. Part of the capital is not spent, it becomes mandatory regulatory bank capital. That's why this isn't a binary bet. The only question is whether our assumptions deserve to be funded. If you are still unsure, bring your financial expert. Challenge every assumption. Otherwise, let's see how it scales. Our public and NDA models are based on the same assumption, capturing just 0.5% of global crypto liquidity. That's not a scalability model. It's a deliberately conservative valuation model. Our model stops at 0.5%. Everything beyond that has to be earned. Let's prove the model with our first customers. We'll earn the right to discuss scalability later. Thank you.